When looking at the three key financial statements, the cash flow used to be the most confusing for me. And it didn't help that formatting was different between websites, whether you grabbed it from the official company website or you grabbed it from like a Yahoo or also a Morningstar. Sometimes I would see numbers rolled up, I would see sections relabeled as something else. And it's just confusing at that point. So, the goal for today's video is to take a look at Apple's cash flow statement. And we're going to take a look at the one on their website as well as Yahoo Finance. We're going to break down each of the different sections and we're going to talk about data points that are missing from Yahoo or Apple's statement and how you can find that from other data points already present. At the very end of the video, also, I'm going to show you how to plot, and I think it's an important skill for you to learn. So a ton to cover, and let's start taking a look at their cash flow statement. What does the cash flow statement tell us? It shows the inflow and outflow of cash within a business during a period of time. So essentially it shows if a company is producing cash or burning cash. And what's great is you can see the cash at the start of a period versus the cash at the end of a period. Where you can find this, well, there's quite a few different spots, right? So first look at a company website, a press release, investor relations, or you can go to a website like Yahoo Finance or Morningstar. Again, a lot of different areas. Or you can even go to the SEC Edgar website, and all you have to do is put in a name, ticker symbol, and you will be able to get that information. So also what I want to mention is the 10K versus 10Q, because they both include the cash flow statement. So 10K is an annual report, where a Q is a quarterly report. Q is unaudited, where a K is audited. And where you can grab these financials at, I put a few different links here on the screen. Happy to include them in the description or comment section down below. So I'll be using the top two links mostly for this video, but I have all these over here so you can access them as needed. All right, and just to show you these few links over here, this is our first one on this side of things. So all you want to do is keep scrolling down, and then you'll have these, all right, over here, right? Condensed consolidated statement of cash flow. So that's what we'll be using. Then you have Yahoo Finance, go to financials, you go to cash flow. Then you have Morningstar, financials, cash flow. And lastly, you have the SEC filings on investor.apple.com, right? You can just grab your 10K annual report published November 1st, 2024. You have all this information over here, right? Consolidated statements of cash flow. It gives you 3 years over here. Again, it's going to be slightly different than what I'm using for this video. But regardless, right, you have different resources available for you if you want to start it from somewhere else. Worth mentioning is all these have design differences associated with it. Sometimes you'll have sections that are rolled up within each other. Sometimes you'll have data that is in one that is missing in the other. The numbers will always line up at the very end, but just a note on that side thing. Also, verbiage will be a little bit different between each of these two. So something to be careful for if you are looking at two different sites. You quickly pick up the differences, but just as a little bit of a heads up over here. And also you need to look at the number format. So the one that I'm using is in millions from Apple, right? And you can see add 6 zeros, right? 1 is equal to 1 million. So in this case, right, net income is 93,736, right? Add 6 zeros to it, $93.7 billion, not $93,736. Yahoo, all numbers are in thousands. So just add 3 zeros, right? 1,000 equals 1. In this case, again, you'll end up with $93.7 billion because on the sheet you see 93.736000, right? I shouldn't say point, but regardless, right? Once you change the format, it's going to be 93.7 billion. All right, and now let's talk about the different sections. So sometimes you'll see this mentioned as 3 main sections or 4 main sections. So every website agrees it's like operating activities, investing activities, financing activities. The one that there's some disagreement on whether it's considered a main section or not is your net increase or decrease in cash, right? This is the summarization section here at the bottom. So if you get asked, if ever, right, what are the 3 or 4 main sections, that is the discrepancy between those. And just to point those out, right, cash flow from operating activities will always be at the top, cash flow from investing activities next, then cash flow from financing activities third, and lastly is your net increase or decrease in cash. Also, let's talk about cash out versus cash in. So cash out is going to be a negative number on your sheet, or you could see them in parentheses like that. And this means it's a decrease in cash in business. So some examples, right? Expenses directly tied to product or service sales, investments in property, plant, and equipment, dividends distributed to shareholders, payments made to settle outstanding debt, right? Cash in is a positive number, which increases the cash in the business, right? Revenue from products or services, proceeds from selling maturing marketable securities, depreciation and amortization. All right. And one other thing to mention, cash flow is not profit, right? These are two different things. So positive cash flow occurs when a company generates more cash than it spends during a given period. A business can report profits while having negative cash flow, and conversely, it can have positive cash flow while operating at a loss, right? Negative cash flow means that a company exceeds its incoming cash during a specific period. This situation doesn't always equate to a loss in profitability. In some cases, negative cash flow stems from strategic choices such as investing in business expansion or long-term growth initiatives. In part one, let's take a look at operating activities. Right? So cash flow from operating activities, how much cash is generated from a company's products or services day-to-day activities. Also, you have to add in your non-cash charges, right? Depreciation, amortization, and stock-based compensation. So we have to start off with our net income. So net income is the profit of a company after all expenses, taxes, and costs have been subtracted from revenue. This should match what is on the income statement. So over here on the left, you have the cash flow statement. On the right, you have the income statement. Net income is the first line in cash flow, but it's considered the bottom line, right, in your income statement. And you can see this matches 93,736 to 93,736. And also just to show you on Yahoo, right, 93,736. And on here, it just says net income from continuing operations. All right, so depreciation and amortization. So this is non-cash expenses that represent the allocation of the cost of tangible and intangible assets over their useful lives. These adjustments reduce the value of assets on the balance sheet and appear as an expense on the income statement. So what we have over here, right, is the depreciation and amortization. So depreciation is expected to be used for multiple years and have a shelf life, right? And this applies to tangible assets, right? This means they have to physically exist. So you can think of like machinery, buildings, or computers. Amortization on the other side, right? Same as depreciation, expected to be used for multiple years and have a shelf life, but this deals with intangible assets. Physically, it does not exist, right? Technically, you have patent papers, but right, or trademarks, but think about it like in terms of software, right? That is going to be towards amortization, where depreciation is a physical asset. Hopefully that makes sense. All right, now we're going to take a look at how these are lumped together. So you can see our next line, right? It says adjustments to reconcile net income to cash generated by operating activities. And we have 11,445. That is on both sides. All right, so share-based compensation expense. This is the cost of the company granting stock options or equity awards to employees and executives. And you have to also be super careful when companies overissue stock. And should probably mention also coders, because a ton of coders do get stock options when they join a company. And you can see over here, share-based compensation expense, 11,688, and it's the same on Yahoo. All right, other non-cash items, right? This is adjustment for items that affect the net income but do not involve cash transactions during the reporting period. And you can see 2,266 for both of these. And again, the different formatting, right? Parentheses on the Apple sheet versus Yahoo, which has a negative number. All right, account receivable net. So this is the amount of money customers owe the company for goods and services sold but not yet paid for. The net amount represents the accounts receivable after deducting allowances used for doubtful accounts. So decreases in accounts receivable is an increase in cash flow, right? Money is being paid back to the business. And just to show you over here, negative 3,788 and negative 3,788. Next, vendor non-trade receivables. This is money owed to a business by vendors that are not related to the business's regular purchase of goods or services, right? 1356 on here. But what you'll notice on this side of things, right? Vendor non-tradable receivables on Yahoo. This isn't present for Apple, but it's still accounted for, right? So you see change in receivable is negative 5,144. I'm going to ignore the last three zeros just based off of the Apple statement, right? So you can see account receivable is negative 3,788, vendor non-trade negative 1356. Well, both of those sum up to negative 5144, right? And show the math there. So it's just not present on Yahoo's website, but it is still part of the calculation. I think this is one of the things that confuses people initially on these, right? You have numbers that don't always add up, and that is the reason behind it. All right, inventory. So this is anything a company produces or buys to sell to its customers, right? Raw materials, work in progress, and finished goods. And you can see, right, both have 1,046 for the inventory. All right, other current and non-current assets. And you can see over here, 11,731 across the board. And lastly, accounts payable, right? Money owed to creditors or suppliers, right? 6,020, a positive number on that side of things. All right, other current and non-current liabilities, right? 15,552 for each of these on this side of things. And then cash generated by operating activities. So this is the most important part of the section. You want to be at a positive number if negative operations are not bringing in a profit, right? And you should also be looking at this on a year-over-year basis. We're going to actually plot this out at the very end of the video in both Python as well as Excel. So stay tuned for that. There's a lot of stuff we could plot, but we're just going to plot that. And yeah, you can take a look at it, right? So on Apple, right, they have it at the very bottom, right? 118,254, and they have it at the very top. It all rolls up together on Yahoo. So same exact number, right? Just a different placement, specifically where you're accessing this data at. And also just to show you everything adds up, right? We start at the very top with our net income, then we add in your depreciation and amortization, then share-based compensation, right? And I'm not going to read all these sections, but I have all these numbers over here. You add them up, and at the very end, you get 118,254. You can see that number is up compared to 2023, where you have the value of 110,543. All right, changes in working capital. This isn't present on Apple, but it is shown on Yahoo. And you can see the value over here is 3651, right? And this is changes in operating assets and liabilities. And this is that whole section on Apple's sheet, right? So you start with 3788 minus 1356 minus 1046 minus 11731. Accounts payable is positive 6020. Then other current and non-current liabilities is positive 1552. And then you see a value of 3651. People will ask about working capital. So again, present on Yahoo, not present on Apple. So I just wanted to show you this. So it's another difference between both of these. All right, part 2, we're going to take a look at investing activities. All right, so let's start off with cash flow from investing activities. This is changes in equipment, assets, or investments related to cash from investing. And the first section is going to be purchases of marketable securities. And a recap of marketable securities, right? This is short-term investments that can be easily liquidated, such as stocks, bonds, and money market instruments. And you can see at the top, right, Apple purchased 48,656, and a little bit buried down below, but on Yahoo, but you can still see that present. Next, we're going to have proceeds from maturities of marketable securities. You'll see this number is 51,211. Then proceeds from the sales of marketable securities, which sounds very similar, right? And you'll see 11,135. Okay, and let's talk about the difference, right? Maturities versus sales. So maturity refers to the point at which a debt security, such as a bond or treasury bill, reaches its due date and the principal, along with any interest, is paid back to the company. Sale, a company sells its securities, such as stocks or bonds it holds as a short-term investment to another party. Similar, but different at the same time. And you can see that this is combined for Yahoo, right? So if you add 51,211 plus 11,135, you get 62,346, and that is under sale of investment. All right, payments for acquisitions of property, plant, and equipment, right? These are assets that aren't sold to customers, land, building, equipment, tools, etc., right? And you can see 9447 present on both of these, also abbreviated quite a bit as PPE. And then we have a section for other, right? Negative 1308, both of those. And then it's on the Apple sheet, but you would see acquisitions in this section, right? And if you are taking a look at acquisitions, you want to look at how much money is being spent on acquisitions versus added back into the company. And cash generated by investing activities, right? Let's take a look at the sum of this group. So we get 2935, positive number. So you add up 48, 656, 51 to 11, 11 135, negative 9447, minus 1308, and you get that final value of 2935. Let's talk about financing activities. And this is sources of cash from investors and banks, as well as the way cash is paid out to shareholders, right? Take on or raise new debt and pay dividends and repurchase stock. So payments for taxes related to net share of settlement of equity awards. This is taxes that a company must pay when it settles equity awards such as stock options or restricted stock units. You'll see those abbreviated as RSU. And this is the very top, right? 5441. Up next, you have payments for dividends and dividend equivalents, right? This is cash outflows related to paying dividends to shareholders, as well as payments related to dividend equivalents on equity awards like stock options or again RSUs. And you'll see this is 15234. Up next, we have repurchases of common stock. This is also known as stock buybacks, and this is the purchase of companies its own outstanding shares from the open market or from shareholders. These repurchases reduce the number of shares in circulation, which can potentially increase the value of remaining shares, improve earnings per share, right? And we've covered earnings per share on other videos. And you can see there's quite a few purchases of common stock, 94,949, right? Big amounts. All right, proceeds from issuance of term debt, net. And this is cash inflow a company receives from issuing term debt, right? Nothing this time, but there was 5,228 last year. Repayments of term debt, right? Outflows a company makes to pay down or settle the principal of its term debt. And you can see 9,958 negative. Next, proceeds from repayments of commercial paper net. This is net cash inflow or outflows resulting from the issuance, repayment of commercial paper, right, which is a form of short-term debt by a company. 3960. And lastly, we have a section for other, right, 361. So, and one thing I wanted to mention for other on Yahoo, right, this is different. You can see negative 5802, where over here it's just 361. So you need to add in payments for taxes related to net share settlements of equity awards from the very beginning, the Yahoos, right? So you see negative 361, and you add in another negative 5441, and you get the value of 5802. That's why in the beginning there wasn't a screenshot for the taxes, whereas in over here, right, it's included on the other section. All right, cash used in financing activities, right? Sum up the group. And again, sum these up. 5441, negative 15234, negative 94949, negative 9958, plus 3960 minus 361, and you get a final value of 121,983. And let's take a look at part 4, which is going to be the net increase, decrease in cash, and increase, decrease in cash, cash equivalents, and restricted cash in cash equivalents. This is cash generated by operating activities plus cash generated by investing activities plus cash used in financing activities. So we just sum up the 3 sections that we just covered, right? And you can see 118,254 plus 2935 minus 121,983, and we get a final value of negative 794. Now you have cash, cash equivalents, and restricted cash and cash equivalents ending balances. So how you work on this, right? You have the previous balance, which you can see over here is 3737. You subtract this negative 794, right? Or I should say you should add the negative 794, and you get the final value of 29,943, right? 3737 minus 794, you get 29,943. What's kind of nice on Yahoo's website is they have the end cash position, changes in cash, and beginning cash position all right next to each other. So same thing, right? 3737 minus 794, 29,943. Versus on Apple statement, you just have to go to the right, you get the ending balance there, then you subtract, right, the increase or decrease in cash, and then you find your new value. Okay, cash paid for income taxes net. So this is actual cash payment made by a company to settle its income tax liabilities after accounting for any adjustments, refunds, or credits that may affect the total amounts. And you can see this value over here, 26,102. Pretty easy on both sides of things. All right, so this is the end of the Apple statement, but there's more info present on Yahoo I wanted to cover. Also show you how we can find these numbers on Apple statement. So first is capital expenditures. This is funds a company spends to acquire, upgrade, or maintain physical assets such as property, buildings, equipment, or machinery. These expenditures are typically long-term investments that will provide value over several years. And you can see capital expenditures is just linked right over here, negative 9447, right below the income tax. And you can see that this lines up directly with payment for acquisition of property, plant, and equipment, right? Same exact value. Next is free cash flow. So free cash flow is going to be your operating cash flow minus your capital expenditures, right? We want to see our free cash flow increasing year over year. And again, this is just right over here, 108,807. And just to do the quick math on this side of things, right? And our operating cash flow, we had 118,254. You subtract your capital expenditures, 9,447, right? Sum it if it was positive, and then you'd see 108,807, which is highlighted down below. And now let's take a look at year over year stats. And first, we're going to take a look at how you can plot data, right? There's two different ways that you could do it. You could use Excel or Python. Personally, I'd recommend eventually learning Python because you have a lot of capabilities associated with it. But this is very simplistic, so you can also use Excel. But again, Python, you can learn a ton. And there's a lot of different ways you could use it beyond just plotting. And if you do want to learn Python, I have another YouTube channel just focused on data. So you can check out Ryan and Matt Data Science. We're almost at 20,000 subscribers by the time we're recording this video. 2 to 3 uploads a week, by the way. All right. And what I want to take a look at is a few different single data points, right? There's a lot of different data that you could grab from cash flow statement, but we're just going to plot out net cash flow from operating activities. And this list could also be expanded out, but you'll pick up the basics from what I'm going to teach you. So I'm not going to explain every line of the Python code. This will be available in a Google Colab notebook, so feel free to download it and run it. But regardless, right, we're only using Pandas, Matplotlib, and Seaborn. And Pandas essentially works with our data frame, which we have over here. We have data from 2021 through 2024. And then we have our net cash flow from operating activities here to the side. And we just plot a simple line plot, right? Our year, and then over there. A lot of this code is reused from the other videos in this series, which makes it pretty easy, right? Just change up the numbers and you can plot it again. And then we also have this onto the side for Excel, right? So we have year, net cash flow, operating activities, insert this into our cells, right? So go to the insert tab, highlight the data, select the recommended charts, choose line, click the title to change it if needed. And then over here, right, click the plus icon, choose axis title, double click each axis title, relabel it, and finalize the formatting. And here we go. Again, prefer Python over Excel, but that's just because I write a lot of Python code as well as running the data. All right, and that is the video. Again, to recap it, right? One of the 3 key financial statements for a company: inflow and outflow of cash within a business for a period of time. Shows if a company is producing cash or burning cash. Positive number means you have more cash. Negative number means you're spending cash. And it shows you the cash at the start of a period versus cash at the end of the period. Hope you guys found a ton of value from this video. And if you did, make sure to subscribe to the channel. I'm trying to upload at least once a week on here, maybe more if I get the time. And thanks for watching.